closing of Monday's trading session with the US dollar strengthening against the Iraqi Dinar around 102, 500 dinars per $100 signals more than just a small daily fluctuation in the exchange markets of Baghdad and Erbil. Currency traders in Allah Korthet factor tend to watch even very closely because in the country's semi-cash economy, the exchange rate is directly tied to purchasing power import cost factor and the public's confidence in financial stability. The difference between the morning and evening trading sessions, though modest, suggests persistent demand for the dollar that has not yet been absorbed by supply coming through official channels. Throughout Baghdad's Al Kifal and now Harithi exchanges, the rise from 152,800 to 152,850 dinars per $100 indicates that traders continue to buy dollars into the close of business hours rather than selling them. This is typically interpreted as a sign that merchants, importers, perfecta, and even households anticipate higher prices or future tightening of access to dollars. When people expect future scarcity, they begin accumulating foreign currency as a protective measure. In Iraq, this behavior has appeared repeatedly over the past years whenever there is uncertainty surrounding central bank policy or international transfer procedures. Exchange shops in the capital selling the dollar at 153,250 dinars while buying at 152,250 dinars also reveal a widening spread between purchase and sale prices. A wider spread usually reflects rising risk perception. Dealers protect themselves by increasing margins when they believe the currency may move quickly. The public often misunderstands this margin as manipulation, perfecta, but in most cases it reflects dealers' fear that a replacement may be more expensive tomorrow than today. In Erbil, the narrower gap with selling at 152,550 and buying at 152,500, that perfecta, suggests a somewhat more stable flow of dollar liquidity in the Kurdistan region compared to Baghdad. This is often linked to differences in trade patterns. Northern Iraq relies heavily on cross-border commerce with Turkey, perfecta, and Turkish lira transactions frequently convert to dollars before settlement. When Turkish markets stabilize, Erbil's exchange environment tends to come slightly compared to the capital. Looking ahead, Fatla takes a prefecta, the most significant factor likely to shape the dinar's direction in the coming weeks, the central bank of Iraq's management of the currency auction system. Iraq's monetary system depends heavily on dollar inflows from oil revenues, which the government receives in dollars and then converts into dinars to pay salaries and finance domestic spending. If oil revenues remain steady and the central bank maintains strong daily dollar sales to banks, the exchange rate could stabilize around the $152 to $153 range. However, if compliance requirements on international transfers tighten further, banks may struggle to access dollars quickly enough. In recent years, anti-money laundering regulations linked to global financial oversight have forced Iraqi banks to verify import documents more strictly. While these rules aim to improve transparency, they also slow down the supply of dollars to the local market. When the official channels slow, traders shift to the parallel market, pushing the exchange rate upward. Another element influencing the market is domestic expectations. In Iraq, government salary payments strongly affect currency movement. At the beginning of each month, when public employees receive wages in dinars, the factor demand for dollars often rises because families convert part of the income into foreign currency as savings. If salaries are delayed, the opposite can occur temporarily. Prifta. The current slight upward pressure suggests anticipation of upcoming payments or seasonal imports, possibly related to food and consumer goods orders. Oil prices remain the backbone of Iraq's currency stability. As long as global crude prices stay relatively firm, the country continues receiving adequate dollar reserves. Should oil prices decline significantly, the government's fiscal position weakens, and the market immediately reacts with higher dollar demand. Traders in Baghdad frequently monitor international oil markets more closely than domestic economic indicators because oil revenue determines the central bank's capacity to defend the dinar. Over the short term, the dinar is unlikely to experience a sharp appreciation. A sudden strengthening would require either a large increase in dollar supply through auctions or a shift in public behavior away from holding dollars as savings. Neither appears imminent. Instead, the most probable scenario is gradual fluctuation within a narrow band, with occasional spikes above $153 dinars per $100 during periods of heavy import demand. Inflation expectations also play a subtle but important role. Many Iraqi businesses price goose on expected future exchange rates rather than current ones. When traders see the dollar inch upward, they preemptively raise prices to avoid losses. This behavior itself creates more demand for dollars, reinforcing the trend. Therefore, even a minor increase like the one observed Monday can influence broader market psychology. The regional environment also matters. Cross-border trade with Iran, Turkey, and the Gulf states involves multiple currencies but frequently settles in dollars. Political tension, sanctions, or banking restrictions in neighboring countries can suddenly increase demand for physical dollars inside Iraq. When that happens, exchange offices see lines of buyers and rates move quickly upward. Conversely, improved banking connectivity could ease pressure on the parallel market and stabilize the dinar. In the medium term, Iraq's monetary authorities are likely to continue balancing two goals, maintaining currency stability and modernizing the financial system. Digital payment expansion, banking reforms, and stronger electronic transfers could reduce reliance on cash dollars. If successful, such reforms may gradually narrow the gap between the official and street exchange rates. But structural changes take time and market behavior rooted in decades of cash transactions does not shift overnight. For the next few trading sessions, analysts would expect minor daily oscillations rather than dramatic moves. The closing near 152,500 dinars suggests the market has found a temporary equilibrium. Yet the persistent upward bias indicates underlying demand remains stronger than supply. If the central bank increases dollar injections, the rate could dip back toward 152,000. If injections remain unchanged and demand grows, the market could test 153,500 or slightly higher before stabilizing. Public sentiment will be key. In Iraq, currency movements quickly become a topic of everyday conversation. When people begin believing the dinar will weaken further, they accelerate dollar purchases, unintentionally causing the very movement they fear. Therefore, statements from the central bank and government officials reassuring the market often have real impact. Confidence alone can reduce speculative buying. Overall, Prefecture Monday's closing figures do not signal a crisis but rather a continuing period of cautious pressure on the dinar. The market appears stable yet sensitive, balanced between adequate oil-driven reserves and persistent private demand for dollars. Unless major political or financial developments occur, the most likely path is continued sideways movement with mild upward tendencies, reflecting a cautious economy where citizens and traders prefer the safety of the US dollar while still operating primarily in dinars.